Haven't done weekend webinars for quite a while. I'm going to cover a lot of topics. I'm also going to show you which markets I'm choosing to provide signals on and which ones I'm ignoring and why, and how I spot an opportunity to enter a trade. Where's the target? Where's the stop? I'm going to go into a little bit more detail. If you're a subscriber, you're going to get this immediately. If you're a follower on YouTube, you'll get this a couple of days later. On that note, I really need to thank you all, especially my subscribers, who have pushed me to the #1 position of currency trading sites. So I'm first among currency trading sites on SiteJabber. And if you go to the currency trading sites, there we go, I'm at the top. So I'm #1 out of 466 businesses. I can't thank you enough. This is really exciting. I'm really humbled. And I've got to thank my YouTube followers as well, who have allowed me to achieve 4,000 hours of views. I'm very grateful to you all. Okay, let's try and help you make some money this week. This is a chart of gold going back from March 22 to November 22. Now, this is the perfect market for me to trade. A nice, easy trend. We know it's in a bear trend. We sell on a recovery to Fibonacci levels or to moving average levels or to trend lines, resistance levels. We get into short positions, we run them down to targets. That's my basic trend following strategy. Then things tend to get a bit tricky when we move sideways. I'm not so keen on that. You don't know you're in a sideways moving trend for a while, obviously, and you tend to lose money. I've talked about this on some of my moving average videos recently. So, for example, here in gold, nice downtrend. Then we get this pretty strong bounce, which at least equals the previous high. And then we match the previous low, we match it again, and then off we go. So this area here is when I start to get confused. There we go. Eventually we establish a channel. But of course you don't know until you've tested that channel at least 3 or 4 times. Here, I thought we were going to turn around and go down because we hit the blue 100-day moving average. We hit the trend line that had just been established after rejecting this upper trend line here. With this red candle, it looked like we were going to turn around and go down and test the lower end of the range. But of course, we then broke up. Now, once that happens, I think to myself, okay, now maybe we're starting an uptrend because we have a bottoming pattern. This was a double or even a triple bottoming pattern. I don't know if you remember me calling that. And then up we went. So even here, we pulled back. Let me see if that tied in with some fib levels. Actually, it didn't, but we did tie nicely in with those moving averages, which worked as support anyway. We got a little double bottom there, indicating that the bull trend was going to resume. Not too difficult to figure out what was going on throughout that period. We do get areas like this, which are just choppy and sideways. Again, I don't like them. I struggle with them. And then you have to wait for the breakout. You're going to lose some money on some trades when we start doing that sideways chop, but eventually you'll get back in. Now, what we've got at the moment, unfortunately, something that's a lot more difficult to read. Even if I told you here that at 1935 that we were going up to 2072, we were going to retest the all-time high, would you really have been able to hold a long position and believe what I said, especially when we got close to a bearish engulfing candle here? So this makes it really difficult. And here, this is just impossible. This sort of area here that I'm looking at, this sideways chop, up one day, down the next. It really is very difficult indeed. Now, if you're a scalper and you can get some trend lines on a short-term chart, maybe you're going to make money there. But I don't find it easy to get low-risk trades on. And then we broke up, we retested the high, and we've come down. So again, this is difficult. This is difficult. So gold, I'm struggling now to figure out what's going on. It looks like we're in this sort of sideways action here. We've certainly got an upper trend line there at 1982. That's actually just below my sell level that I had on my report on Friday. Now it's a question of, do we hold the 100-day moving average? That's around 1940, 1935. That will be the key support area for me in gold. So here is my 1 hour chart for gold. This is where I had to go to try and find some signals in a short-term sideways trend. And it's much easier to see how this is a sideways trend when you look at the 1 hour chart. So we're going back to May the 15th. I had my sell level slightly higher. I was looking at 1984, 1988 as my sell level. Why? I had a fib fan line there. I had a confluence of Fibonacci levels, 38.2, 61.8, and I had the green 500-hour moving average. That to me looked like a strong resistance level. We didn't quite make it. We actually just held the trend line that I've just drawn on there and reversed. The moving averages are becoming less useful on the short-term chart. as you know from watching my moving average videos lately, they don't work so well when the market is just ranging. You can't rely on them as support and resistance levels. It looked like we were getting a buy signal on the 1 hour chart with the 100-hour moving average crossing above the 200, but we've broken below those moving averages, and the moving averages are just turning sideways anyway. So I'm going to wait for the price action to actually tell me rather than an indicator. This is the 1 hour chart for silver, which shows that I have a good support level around 23.50. Now, I thought that would be a good resistance level, but it's now a good support level. The longer term chart's more confusing. We've got the 23.6% fib, the 61.8% fibs, both around the 23.50 area, 100-hour moving average. I've got this trend line here as well. So there's a few reasons why I think this will be a good support level. Where would I put my stop? If I'm buying into a long around 23.50, I'd have it below the 200-hour moving average, which is at 23.30. So I'm risking 20 pips, and if I'm right and this trade does work, I'm looking at 2400 as my target, risking 20 pips to make 50 pips. Does that work for you? Well, it certainly works for me. That's a good risk reward in my book. And as you can see, we've got strong resistance at 38.2% fib. We've got some price action there indicating that there should be resistance. I had us selling silver up there, didn't I, at 23.90, 2400 this week, and that certainly worked well enough with a profit in the bin by Friday evening by the close. Now we've actually got the green 500-hour moving average up there as well. So this is my range at the beginning of the week, 23.50 up to 2400. If you're risking 20 pips to make 50, that works. And if you could do that all week, I'm sure you'd be pretty happy. Longer term chart for silver is far more confusing. We were in this bear trend, which would have actually been easy enough to trade if you got on some of these moves, but obviously you'd have had to have run these moves for many months. This is the weekly chart. So then you get things like this, where for weeks we're up and down, closing almost unchanged. More difficult. Now, I thought we had a breakout here. Nice bullish green candle, off we went. But after a few weeks we've returned. I thought this was a buying opportunity at that trend line, but we've now sunk back within that channel. If you say to me, what do you think is going to happen to silver now? Well, I've got two arguments. We're back within the channel. So does that mean there's going to be pressure to the downside? But right now we're holding the 100-week moving average. So perhaps we could break up. Honestly, I can't really decide, which is why I'm just focused on that 1 hour chart for scalping opportunities, risking 20 pips to make 50, and then I'll see how the longer term charts develop. We're basically trading at the same price level as we were at the beginning of December. Yeah, we've gone down a bit and we've gone up a bit. We've still returned to what is roughly the middle of the range. The moving averages are flatlining now, 500 flatlining, 200 flatlining, 100. It's only been flatlining for a month, but it does indicate that the bull trend has ended. Potential double top there, which I did identify, and that did play out. Now, we do have support around 2280. We have been buying around there. That did work quite well. And then we hit that target of around 2400. What does this all mean? Daily chart is not really telling me anything. 2400, there is not really any resistance on the daily chart. I'm only getting that from the hourly chart, but there is good support around 2280 when you bear in mind the Fibonacci level and the 500-day moving average. And that is why I had us buying silver back there a couple of weeks ago. So if it retests, let's see if that's a strong support level. I hope this is helping you, and if it is, please do give me a like, give me a thumbs up. Right, this is oil. Now this is a classic example of what I'm finding tough to read. Here was okay. We had some trend lines. We had some fib levels working. The hour moving average was working. So we got some profitable trades on. This was more difficult on the downside of this channel, but we eventually did get a trend line. This was where OPEC made the cuts, whipping over to the weekly chart. We had a 38.2% fib level, and then we had the 500-week moving average, 200-week moving average. So we had a lot of support around there, even some price action swing lows backing up the fact that 65, 64 would be a good support level. I know you know all this if you're a subscriber. And a potential double bottom. So I thought, okay, this is good. Here we go. I've got all the signals I need. A double bottom at a very strong support level in a longer term bull trend. This has got to be good for oil. And this is where it gets confusing for me because it just didn't play out. And the weekly chart just looks like we're stuck in a range from 65, 64 up to $82, $84. And looking at this, I just don't know what to do now. The double bottom hasn't played out. Yes, we're holding the support level, but it's not giving us the bounce off there that I would have expected. When you look at the daily chart, even more confusing. 50 and 100 moving averages are flatlining and converging. Moving averages converge when we are in a longer term sideways trend. 200-day moving average is just sinking now to converge with these moving averages. If we continue to go sideways, you'll see the red 200-day moving average just start to float above the 100. I don't know what to do with this. If you've got any ideas, put them in the comments box, because I really do need some help with trading this on a day-to-day basis. And even if you said to me, okay, Jace, here's $500 if you tell me where oil's going to be in 2 weeks, I really wouldn't know. All I know is we've got resistance up around $79.5, $80. That would probably be worth a short position with the trend lines converging, the confluence of Fibonacci levels that I have there, the 23.6 and the 38.2, the 200-day moving average. That is a tradable area. Now, I am going to show you some markets which are much easier to trade, but I've got to show you the dollar index chart. Here's where I would have my trend lines on the weekly chart, and you can clearly see that we've been in this sideways pattern for a significant period of time. We're really ranging from, where is this now? This trend line's at 106, the lower trend line's at 102, 101.75. You don't need to be an experienced technical analyst to realize that this is the sideways trend. Holding the 100-week moving average was positive. I'm not surprised we bounced off there. I did have us buying into long positions on the dollar once I'd seen confirmation on the daily chart, which I'm going to show you now. 500-day moving average as well. Now, we didn't quite touch it. We didn't get into longs on a test of that moving average. I got us into longs when we broke above the 100-day moving average. But we only got as far as the 23.6. This, again, is now getting a little bit frustrating. The range is narrowing when you look at it on the daily chart. I'm going to have to go back to the short-term chart. And this is how I'll now build the picture up. I'm going to take this rally from 8th of May, 4-week rally. Now, the moving averages did give us an indication that a bull trend was going to start. We had this horrible sideways action, which, as you know, I don't like. The only thing I can do is put trend lines on here to try and figure out when we're going to have a breakout. Where would I put my trend lines? Even the trend lines are a struggle to know. Okay, I would have done something like that. We had the false breakup. We had the move back down. I'm really showing you how I would break down a chart now in the short term to figure out a trend and trade ideas. So I hope this is really helpful for you. Some sort of triangle pattern. We're waiting for the breakout. The moving averages have just converged and they're going sideways. We know that this is not a trading opportunity. Sit back, wait for something. We start to break above the trend line and the moving averages. Then the moving averages all start to turn positive. Of course, you don't really know that until here, if I'm honest. Would I have bought there? No, I really wouldn't have done. I would have been wondering whether we're going to hold this trend line here. This is definitely a trend line that I would have had on there. Yeah. No, I wouldn't have got this move. When we broke above there, then I would have started thinking, hang on, I probably need to get into a long position here, but there's no point in chasing it now. This is the real test, and I haven't prepared this, so I don't know. But did we hold a Fibonacci level? I would have definitely been putting my Fibonacci level on here, thinking I need to get into a long position. Okay. Not perfect, because if I'd been buying around 102.35, we overran as far as 102.20, but we didn't get down to what would have been a really good buying opportunity around 102.15, 102.10. So didn't quite touch what would have been the perfect buying opportunity, hitting the 100-day moving average, the 23.6% fib, and that trend line. The dollar bulls obviously decided we're going up anyway, we're going to get in a little bit early. So I would have just had to jump in early, or on a break above 102.75, because I've already got it into my head. This is going up. The 100 moving average is our guide. Even if you weren't long at that point or on the break above 102.75, let's see if these Fibonacci levels would have got us into a long position up here. Yeah, now this would have been absolutely perfect. You'd probably be kicking yourself because you missed most of the move, and I'd like to think I got us in a bit earlier, but you've seen it jump from 102.75 up to 103.60, and you're thinking, damn, I didn't get in. Here was your chance. 103.00 in the dollar index, touches the 23.6% fib, touches the 100-hour moving average, and it sits around here for long enough for anyone to buy into a long position, and then bang, off we go. You're feeling pretty happy. Yeah, you've missed half the move, but so what? If you manage to hold it up to around the 104.40, 104.50 area from 103.00, you've made 150 pips, and you're pretty happy. And it was an easy ride because we didn't break down below the 100-hour moving average until we got to this area here, which is 104.00. So even if you'd had a trailing stop on the break below the 100-hour moving average, you still would have bagged 100 pips. As a trader, we're just trying to take the easy money. We don't have to buy it right at the bottom and sell it right at the top. That was a 350 pip move, and you may have only managed to grab 100 pips out of it, but that's fine. Just take the 100 pips and move on to the next trade. You see how I'm breaking things down now. What do I think for the dollar index going forward? We've had a bounce to the 200 and the 100 hour moving averages, which will cross over if we sink on Monday, obviously. This is probably a sell. In the short term, we're probably having a correction. Now, I put the trend lines on here which show we could be in a declining wedge, and we could certainly test the bottom of that wedge. Eventually, we'll probably break up, because a declining wedge can actually be a bullish pattern. It can eventually lead to a break above the upper trend line. But right now, if you said to me, Jason, you've got to put a trade on here, what are you going to do? I would be putting on a short position. Let's see what my fibs are saying. We're also testing the 50% fib in the very short term. So you can see what we've got going on here. Trend line, 50% fib. Moving averages, I would try a short. Where would I put my stop? I'd put it above 104.20. I know you probably can't actually trade the dollar index, by the way, with your broker, but this is a guide. If you're trading the euro, US dollar, or cable, it's worth keeping an eye on the dollar index, because it can just give you maybe a little heads up as to where the dollar's going. So, selling around 104.00, 104.10, stop above 104.20, tiny risk, 15-20 pips, and if I'm right, we could certainly retest the low that we saw this week around 103.40. That would give you a 60 pip profit. Who's not going to do that trade? We're all going to do that trade. Now, just bear in mind that for the dollar index, the big resistance is around 105.70, 106.00. Now I'm going to show you some markets which I'm just going to avoid this week. They're just too difficult to read. Aussie versus the US dollar. Look, this is horrible. I've been waiting for this pattern to play out. Now, we did make some money on this. We did sell the upper parameters here. I did say don't buy the lower trend line here. I think we'll probably break down. We'd only tested it once. So the third test, I thought we might break down. This one looked a bit more solid because we had a fib level up there. We had a trend line. We had a 100-day moving average. So I was comfortable selling there at the top. I wasn't comfortable buying at the bottom. Now, this was a breakdown. I thought, great. Finally, we've got a swing trade opportunity. Why would I not think that? I predicted that we would break below that trend line. I even wasn't surprised to see a retest of the trend line. And I thought that is our sell opportunity. But I was wrong. We've broken straight back up into that channel. Now, the moving averages are flatlined. They have been flatlining for 2 months. We're back in that range. I just don't know what to do with it. I'll show you the short-term chart because there is a trading opportunity there. The 50% Fibonacci level held on the 1 hour chart. We could sink down to 65.40. It's possible. We're in a sideways range. Why wouldn't we just turn around and wipe out the recent gains? Really, the only trading level for the Aussie dollar that I would even think about trying would be down at around 65.40. The 200 and the 100 hour moving averages. We've got a good fib support there, but I think there are better opportunities out there. New Zealand dollar versus the US dollar is a bear trend since 2021, but this V-shaped recovery has just killed the opportunities to make good money in this. Down 1 week, up the next since end of February. Down, up, down, up, down, up. Then we get this gravestone doji. Down, up, down. This is ridiculous. This is not a trend that is tradable. Would I now attempt to short at 61.30, 61.50, hoping that we've broken out of this sideways range and that we will start a move to the downside? Yeah, I would. Stop above 61.65. That gives us a 25, maybe 30 pips stop. The first thing we should do is at least test this little swing low down at 59.90, so a potential 140 pip profit for a risk of 30 pips. So I will be going for that trade, and I would even be tempted to take off half of the short position if we do retest that 31st of May low, but maybe even keep half the position on and just see if we break down and come as far as 59.20, 59.00, which looks like a decent support level with this trend line. A 200 pip potential profit for a 20, 30 pip loss. You're looking at 9 or 10 times risk reward ratio. I think we're all going to go for that. Hands up if you want to do that trade. We're going to try it, aren't we? This New Zealand dollar versus Japanese yen. I cannot find a trade opportunity. Dollar Swiss, not a pair that I would usually trade. We spent far too much time doing this kind of thing, going sideways. But what I did do is get us into a short position around the 91.30 area, and that worked a little bit. We got a little bit of profit before the weekend. We are in a bear trend. since November, and I would be sticking with that bear trend and selling around the 91.30 area. I think the Canadian dollar versus the Japanese yen is a tradable trend. Long periods where we were doing this sideways stuff again, but we've broken above the early May high, this support area here, and we're pushing up. We've started to accelerate to the upside, and I think this might be the start of something that really does push higher. We're testing the 61.8% fib, so we've already had a really good run, but I think we could start to accelerate to the upside. It really would have been tough to hold a long position, wouldn't it? And really, if I'd said to you that the Canadian dollar is going to rocket against the Japanese yen from now till June, from middle of March to June, would you have been able to hold it through this whole sideways thing, this push up, this pull back? You'd have had to have just stopped well below the 500-hour moving average. Really tough. These markets have not been easy this year. Okay, I'm going to finish up this weekend webinar with the euro versus the US dollar. Euro sank against the US dollar from, I think it was May 2021, down to the end of September. Okay, nice bear trend. This is a trend that you can really trade. Nice bounces. The bounces are enough for you to get into a short position without stopping you out and being too strong. The peaks generally are lower than the previous peaks. The troughs are generally lower than the previous troughs. Even the consolidation patterns didn't go on for too long. The dollar was pushing higher as interest rates took off, as inflation took off. The fundamentals were backing up the fact that the dollar was pushing ahead against the euro. And we then finally came to a low here. So the euro had what is basically a bounce in a bear trend. Let me just show you the weekly chart. Let me show you the monthly chart. Now this chart goes back to 2008. That's the global financial crisis right there. So we have been in a bear trend since 2008. That, according to my maths, is 15 years bear trend against the dollar. And then guess where it peaked? The 23.6% fib. 110.69 was the 23.6% fib. We got to 110.95 and then turned around with a big, almost bearish engulfing candle on that weekly chart. This is why you've got to look at the longer term charts. Isn't that incredible? I would have liked to have seen a trend line or a moving average backing up that resistance. So the euro looks like it has resumed its bear trend against the US dollar. Now, if you remember when I talked to you at the beginning of the video about the dollar index, and I said to you that I thought the dollar had resumed a bull trend, this is really helping me to believe that that is the case, especially the euro is the heaviest weighted currency in the dollar index. So this is why the dollar index and the euro US dollar correlate quite closely. I think that the euro could sink further against the US dollar, and we did see that non-farm payroll number out pretty strong on Friday. It's clear that the US isn't going into recession yet, and it may need higher interest rates going forward unless we see a collapse of inflation, but I tend to think that inflation could be quite sticky around where we are now. Anyway, if I had to put a trade on now in the euro versus US dollar and hold it for a week or two, I'd rather be short than long, put it that way. And when you consider that we are in this longer term bear trend from 2008, we did reject that 23.6% fib. It does seem to me that the pressure is to the downside in the euro. I hope that's helpful. I've really tried to explain my whole mentality, my whole thought process. Now, I do the short 5-minute videos during the week for my subscribers. I release them a bit later for my YouTube followers. If you like this, if you like a good 30-minute chunk to get your teeth into, then please put some comments down below and encourage me to do more of these. And of course, do give me a like. I would appreciate that. Good luck if you're trading this week.